Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold, and my dear friends, what happened to gold? Gold saw massive fall yesterday. Gold is standing at 1874 right now. Nobody was expecting 1874 on the chart of gold within just few hours. Gold weakens to 6 months low. Gold held below $1880 per ounce on Thursday, hovering near its lowest levels in over 6 months, pressured by a strong dollar and rallying treasury yields on the back of a higher for longer interest rate scenario. If we look at the chart of the US government bonds, you can see the government bonds are flying. If you don't know about the correlation, then in simple words, okay, the government bonds are considered as the safest form of investment. But the problem with the government bond is that the interest is very low. So when the interest rate on bond increases, people feel very happy, they feel safe. So what they do is they take out their money from gold, and as a result the price of gold decreases because they take out the money from gold and invest their money on bond, because bond is the safest form of investment. And when the price of bond goes down, see, already the returns are very low, so people get frustrated, they take out the money and put the money in gold. So as a result, when the price of bond goes up, gold falls, and when bond goes down, gold goes up. And right now you can see bond is flying. So as a result, market or the chart of gold is seeing or witnessing heavy selling pressure because people are exiting from gold as a form of investment and putting their money on bond. So right now you can see the bond market is flying, and more or less you can expect that this up move will continue. If bond market comes for retracement also, that will just be a retracement. If bond market goes down also, okay, if it will just be a retracement, because for any trend reversal, whether it is bond market, whether it is DXY, fundamental factor or news is important, which is not there right now. Maybe the next NFP will bring some weakness on the chart, but right now things are not positive for gold, both fundamentally and technically. So during the day, if bond comes also, you can expect that these levels will provide support to the market and bond will try to bounce back again. If bond bounces, there will be pressure on the chart of gold again. And if you look at the chart of DXY, then you can see DXY is standing at 106.70. My goodness. And it made a high of 106.84. DXY is also flying. Similar stuff. There is no resistance on the chart right now. This market is being driven by news fundamentals, so as a result you need to plan your trades accordingly. If you are standing against the trend of the market, then my dear friends, you are making a big mistake. You are about to lose your capital. Do not gamble with your hard-earned money. Do not gamble with your capital. Okay, we most of the time we focus about the entry of the market, entry of our positions, but exiting from a position at the right moment is very important. I always show you guys the Forex sentiment meter. The sentiment meter shows the position of the retail traders. We always see the 90% trader and 80% traders are on the opposite side of the market. For example, Euro USD, you can see 91% are on the buy side. You can, on the chart of GBP USD, you can see 92% are on the buy side, only 8% are on the sell side. And if we look at the chart of our beloved gold, you can see here on the chart of gold, 91% are on the buy side and only 9% are on the sell side. And the average buy price you can see is around 1907. Why does it happen? Why 90%, more than 90% traders are on the sell side, or they, sorry, on the buy side? Why more than 90% traders are losing money? Because they did not exit at the right moment. So see, 100% accuracy is not possible in the market, but if you do not exit at the right moment, you are making a big mistake. So my dear friends, if you are holding a buy position on the chart of gold, Euro USD, GBP USD, try to exit at the retracement or try to exit as soon as possible. Okay, that's my request. Now let's look at the chart of gold and see in this chart. Okay, there's hardly we have any critical trading opportunities. Okay, if you already have a sell position, you can be on the trade, enjoy the ride. Hopefully you are making a good money. Yesterday, remember I told you guys that I have a sell stop at not 18. I have a sell stop at 1898.30. And if you guys are watching the market, then remember, okay, after breaking the 1898 level, market was stagnant for 2 to 3 hours. Okay, to be honest, I got very impatient. Okay, I had sell position on two of my accounts, so I exited from one account with 25 pips. Okay, only 25 pips. I got restless. I thought that okay, there may be a minor bounce, so I exited from the major position with only 25 pips. Just imagine. And in the second account, I exited at 1889 level. Okay, to be honest, I was not expecting this kind of fall. Actually, nobody was expecting. And when I saw later on, I saw that market was below 1880 level. I was surprised because we had a support around 1885 level. But always keep in mind, whenever a market is driven by sentiment, whenever a market is driven by news or fundamentals, technicals do not work. Probably you guys have heard me saying thousands and thousands of times. And in this market condition also, you can clearly see the market's trend is very much towards the downside. The sellers are dominating. So as a result, it's better and safer to be on the sale side only. Okay, right now we don't have any immediate support also. Even if you have any immediate support, that is not gonna work because sellers are dominating this market. Right now you can see market is standing at 1874 right now, and in this type of market structure where there is a fall going on, sell on rise. Okay, sell on rise is the best trading strategy. Means whenever the market will go up and reverse from the resistance, you need to take a sell position. So in this case, the next selling opportunity will be around 1885. Why? Because 1885 was the previous support. So the previous support will be acting as resistance here. So during the day, if you see market going up, observe the market around 1885, 1886 level. If market reverses, you need to click on the sell button. Okay. And if we draw FIBO here, you can see the FIBO 23.6% is also around the same area. So we can expect that around 1885, 1886 level, market will face some resistance. You can see the second resistance to take a sell position will be around 1894.95 level. But market's chance of going towards 1895, 1896 level are very, very less. This one. And this level seems to be a better level because along with FIBO 38.2, we also have the 50 moving average. But right now the market is very weak. Chances of market going to this level are very, very less. But if market goes, you can look for a sell as well. Keep in mind, before taking a sell position, okay, you need to observe the market behavior first. No level is permanent in the market. As a result, you need to get the confirmation first. Confirmation means simply switch to a lower time frame and just see whether market is showing price rejection from above or not. If you see that around 1885, 1886 level, market is struggling, market is showing price rejection from above, click on the sell button. But if you see the market is standing at the resistance with a big green candle, use your common sense. Do you think you should go for a sell? Obviously, no. Okay. And buyers try to exit at the retracement. Okay. And there is no other opportunity. Because if market keeps on falling, then obviously you will not get any chance to exit from your buy position, and there's a high chance that you may lose your capital. And during the day, if market again falls, high chance that market will fall, because sometimes the market is so weak that market cannot go up. Okay, if that happens, you can again go for a sell position below 1872.50. okay, below 1872.50 you can go for a sell again. But already the market has shown extreme selling pressure, so follow proper risk management. Do not go very big, because selling at retracement is the best and the safest trading strategy. But sometimes market doesn't go, so in that case we are forced to take a sell position at breakdown, but we need to be careful. Okay, so you can also sell below 1872.50. but if market goes up and reverses, this will be a better position to take a sell. And if you look at the daily chart of gold, my dear friend, you can see that on the daily chart of gold, market has broke the previous low here. So this is a sign of danger. Okay, sign of danger, because the weakness may continue. And if you're wondering about the next support, then sadly, my dear friends, we do not have any proper immediate support or strong support on the chart of gold. The next support on the chart of gold is around 1840. to 1850. This is the next immediate support on the chart of gold, but still there is no guarantee that market will show a trend reversal from 1840 or 1850, because if the same market sentiment remains, then obviously the pressure on gold will continue, and as a seller, okay, you will get further selling opportunities. If you have already a sell position on the chart of gold, be on the trade, enjoy the ride. And if you're looking for a fresh selling opportunity, if you're a day trader like me, then obviously you can look for a sell around 1885 level if market reverses. But if market shows further recovery, then you will get selling opportunity around 1895 96 level. And in case market fails to go up, and if the market breaks again, then 1872.50, okay, will be our next selling opportunity if market breaks the level. But keep in mind, not only in gold, in all the markets around the world, okay, sell on rise or sell at resistance is the best and the safe trading strategy. Okay, yes, hopefully you guys made good money yesterday. Many of you were trapped also, those who took buy position. Keep in mind, trend is very, very important. Trend is your friend, and right now you need to follow the trend of the market. There's a very thin line between trading and gambling. Don't make the mistake. Okay, and this is my analysis, so please do your own analysis, do your own research, and do not gamble with your hard-earned money. Bye bye, take care.